Hey everyone, welcome back to quantifiedstrategies.com. Have you ever wondered just how often the stock market goes absolutely wild with a massive 5% gain in a single day? Well, today we're diving into the S&P 500 to find out how rare these huge daily jumps are, what causes them, and what they mean for you as an investor. If you love learning about the stock market, hit that subscribe button and ring the bell so you never miss a video. First things first, the S&P 500 is a stock market index that tracks the performance of 500 of the largest publicly traded companies in the US, like Apple, Microsoft, and Amazon. Yeah, it covers about 80% of the US stock market's total value, making it a go-to benchmark for investors. Since it started in 1957, it's grown by about 10% annually on average. But today, we're focusing on those rare, exciting days when it jumps 5% or more in just one trading session. We did some digging, and here's the scoop. Since 1960, there have been at least 24 days where the S&P 500 skyrocketed by 5% or more. That's out of roughly 16,400 trading days. Doing the math, that's about 1.5% gain every 683 trading days, or roughly once every 3 years. Pretty rare, right? What makes the S&P 500 shoot up 5% in a day? These gains don't just happen out of the blue. They're usually triggered by big events like positive economic news, like strong GDP growth or blockbuster corporate earnings, major policy changes like interest rate cuts or huge stimulus packages, geopolitical wins like trade deals or resolutions to global tensions, market rebounds, especially after a big drop during a crisis. Short covering rallies, meaning those investors who are short, are buying to cover their positions. Think of it like a coiled spring. After a lot of pressure, the market can bounce back hard when good news hits. Do you notice a pattern? The gains happen in clusters, typically in bear markets, perhaps surprising for many investors. These big gains often come after major volatility like a crisis or a market bottom. What does it mean for you? Well, a 5% gain can be a huge win for your portfolio, especially if you're invested in S&P 500 index funds. But here's the catch. These days often come with high volatility, which means big risks too, and they happen always surprisingly. Here are a few tips. Stay diversified. Spread your investments across stocks, bonds, and other assets to reduce risk. Think long-term. The S&P 500 has always recovered from crashes, so don't panic over short-term swings. Use dollar-cost averaging. Invest a fixed amount regularly to avoid trying to time the market. So there you have it. 5% daily gains in the S&P 500 are super rare, happening about once every 3 years, and they're usually tied to major economic or policy shifts. If you found this video helpful, give it a thumbs up and let us know in the comments. Have you ever caught one of these big market days in your portfolio? Or what stock market topic do you want me to cover next? Don't forget to subscribe and hit the bell for more videos on investing, the stock market, and personal finance.